Are you ready? Time to turn theory into action. In this lesson, you'll practice using three powerful leading indicators: RSI, stochastic oscillator, and Fibonacci retracement. Don't worry if it feels tricky at first. Practice makes perfect, and each task is here to help you improve step by step. Time for a quick quiz. Apple's price just bounced off recent lows and is currently trading at $199.74. The RSI reads 45.92. There's no major breakout or breakdown yet. Based on this RSI level and the recent price action, what's the smartest move right now? Sell quickly, because the price will drop again. Buy now, because momentum looks strong. Wait for more confirmation before trading. Short the stock, because RSI is too high. Yes, you're right. Well done! RSI at 45.92 is neutral, meaning there's no strong buying or selling pressure. The price recently bounced, but without a clear breakout or RSI shift, it's smarter to wait and avoid guessing. Make a decision. The euro-dollar price has spiked sharply, and the RSI is now above 84. Momentum is strong, but the price is far from recent support zones. Based on the current RSI and price action, what's the most reasonable move? Do nothing and wait. Sell or take profit. Enter a new long trade. Open a short trade immediately. Yes, you're right. Correct. The RSI is at an extreme level, suggesting the move may be overextended. It's a good time to lock in gains or wait for a better re-entry point. Buy, sell, or wait. Starbucks has recently shown a sharp drop followed by a strong green candle. The stochastic oscillator is in the oversold zone, and %K, reference 1, has crossed above %D, reference 2. What would be the best action now? Do nothing, consider buying, wait, or consider selling. Yes, you're right. Excellent. The stochastic crossover, %K above %D in the oversold zone, is a classic early signal of potential reversal. Combined with a strong green candle, it suggests growing bullish momentum. Time to practice using Fibonacci retracement. Tesla surged from $239 to $486. Now trading near $479, you expect a pullback and use Fibonacci retracement to spot potential support. What level might offer a strong support and buy opportunity based on historical Fibonacci logic? Around $391, the 0.382 level. Around $291, the 0.786 level. Around $427, the 0.236 level, around $486, the recent high. No, the correct answer was around $391, the 0.382 level. Oops! If a pullback starts, Fibonacci levels like 0.382 or 0.5 often act as support, giving traders potential buy zones during a retracement. Make a decision. After bouncing off the 0.618 level, Netflix couldn't hold gains and has fallen through multiple retracement levels. It's now nearing the 1.0 level. If you're already holding a long position, what should you do? Hedge with options but keep the position open. Tighten your stop or exit to minimize loss. Double down and add more to your position. Ignore the drop. Yes, you're right. Great job! Remember that falling below key Fibonacci levels signals fading momentum. Nearing the 1.0 level means the full rally is gone. With no strong support left, protecting your position is the smart move. Nice job using RSI, stochastic, and Fibonacci. These tools help you spot momentum and turning points. Keep practicing. Consistency comes with experience. You're on the right track. Let's explore lagging indicators. You don't always need to catch the first move. Sometimes the real opportunity is staying with the trend once it's confirmed. In this lesson, you'll explore what makes lagging indicators different, how they work, and how to use them to stay aligned with market trends. Lagging indicators help traders confirm trend direction, filter out short-term price noise, and avoid acting on false signals. They're especially useful in trending markets, where the goal is to stay in the move as long as it lasts, even if you miss the very beginning. Instead of reacting to each new price movement instantly, lagging indicators look at patterns in past price data over a set number of periods. They calculate averages, trends, or changes based on that data to reveal what direction the market is moving in overall. Because they wait for confirmation, lagging indicators are often slower to respond than leading indicators. They don't try to catch the start of a move, they wait until the move is real. The delay makes lagging indicators more reliable in spotting true trends and in filtering out fake moves. Now that you know how lagging indicators work, let's see how they help traders confirm that a trend is real. Each one uses price data a little differently, but they all aim to filter out the noise and show you whether the market is truly trending or just bouncing around. One of the most popular lagging indicators is the moving average, or MA. It calculates the average of past prices over a set period to create a smooth line on your chart. This line filters out daily fluctuations and shows the general market direction, making it easier to stay focused on the trend. If the price consistently stays above the MA, it's a sign of an uptrend. If it remains below, it often confirms a downtrend. MAs don't predict what's coming next, but they give traders confidence that the trend they're seeing is real and worth following. Time for a quick quiz. The price has just broken above the moving average and stayed there for the last few candles. The moving average is starting to slope upward. What does this most likely indicate? A confirmed uptrend and possible long entry. A sideways market. No action needed. Yes, you're right. Exactly. A break and hold above a rising moving average is a strong sign of a developing uptrend. Many traders see this as confirmation to enter long. You've seen how MAs can smooth out price and confirm trend direction, but what if you want more insights? That's where MACD comes in, which stands for Moving Average Convergence Divergence. MACD compares two moving averages to show whether momentum is building or fading. It is made up of three components. The first element is the MACD line, which shows the difference between two moving averages, usually 12 and 26 periods. When the line rises, momentum is strengthening. When it falls, momentum may be fading. There is also the signal line, a moving average of the MACD line. It acts as a smoother, giving clearer entry and exit signals when the MACD line crosses above or below it. You can also see a histogram. It is a visual bar chart showing the distance between the MACD line and the signal line. A histogram helps traders see at a glance whether momentum is strengthening or weakening. Bigger bars mean stronger moves. Shrinking bars suggest momentum is fading. Knowledge check. Elements of MACD. Each part of the MACD plays a specific role in helping traders understand momentum and confirm trends. Can you match them correctly? Bollinger Bands consist of three lines plotted directly on your price chart. Nice work. Now that you understand how MACD helps confirm momentum and trend strength, let's explore another powerful tool, Bollinger Bands. This indicator doesn't just confirm direction, it shows you how volatile the market is and where the price might be overextended. Bollinger Bands consist of three lines plotted directly on your price chart. A middle band, 1, is a simple moving average, usually 20 periods. An upper band, 2, is placed 2 standard deviations above the moving average. A lower band, 3, is placed 2 standard deviations below the moving average. How to interpret these bands? If price touches or moves along the upper band, 1, it often confirms an uptrend. If price hugs the lower band, 2, it may confirm a downtrend. If price moves outside the bands, 3, it could signal a reversal or pullback, but only if supported by other signals. Bollinger Bands help traders understand not just direction, but how strong or risky a move might be. They're especially useful for spotting potential breakouts, measuring trend strength, and identifying overbought or oversold conditions. Knowledge check. How well can you read Bollinger Bands? You're watching the market and the price starts dancing near the bands. What does it mean? Match each behavior to the most likely market condition. You've just learned how lagging indicators help confirm trends, filter noise, and guide better decisions. Now you know the basics of moving averages, MACD, and Bollinger Bands. Next up, a quick practice session to help you review and lock in what you've learned about lagging indicators. Let's go! Are you ready? Let's put your knowledge to the test. In this lesson, you'll work with key lagging indicators, moving averages, MACD, and Bollinger Bands. It's okay if it feels challenging at first. With practice, you'll gain the confidence to read trends and signals more clearly. Time for a quick quiz. Netflix has been in a strong uptrend, riding above the 9-day moving average. But recently, price action has flattened, and candles are hovering around the moving average, showing hesitation. You're holding a long position. What should you do based on this price behavior? Exit now. Short it. Add more. Stay in. No, the correct answer was stay in. Oops. Although momentum has slowed, price hasn't closed decisively below the MA. Without a strong breakdown or reversal signal, exiting now may be premature. Holding allows you to stay with the trend while watching for confirmation. Time for a quick quiz. Meta was in a strong uptrend, supported by the 30-day MA. Recently, the price has broken below the MA with several red candles. You're holding a long position. Based on the price action relative to the MA, what's your move? Buy more? Set a stop loss just below support and monitor. Exit the position. Hold tight. Yes, you're right. Excellent. While the price has broken below the MA, a full reversal isn't confirmed yet. Placing a stop loss gives you protection in case the decline continues, while still giving the trade room to recover if this is just a pullback. Time for a quick quiz. You've been watching Amazon and waiting for a potential entry. The MACD line, blue, has recently crossed above the signal line, red. At the same time, price action is trending higher with strong green candles. Based on the MACD and recent price action, what would be a reasonable move? Ignore it. Wait for a pullback. Enter a long trade. Short the stock. Yes, you're right. Great job. When the MACD line crosses above the signal line, it indicates increasing bullish momentum. In this chart, the crossover aligns with strong green candles and a consistent upward trend, making it a logical point for a long entry. Make a decision. Pound dollar has just pushed above the upper Bollinger Band with a strong sequence of green candles, but the price is now outside the volatility envelope. What would be the most reasonable action to take at this stage? Enter a long trade now. Open a short position immediately. Take profits or tighten your stop. Do nothing and wait for the price to return to the mid-band. No, the correct answer was take profits or tighten your stop. Oops, a push above the upper Bollinger Band shows bullish momentum, but prices outside the band often revert to the mean mid-band. This is a good moment to manage risk, either locking in gains or tightening stops in case of a pullback. It's not necessarily a reversal signal, but it's not ideal for fresh entries without confirmation. Congratulations, you've practiced using key indicators, moving averages, MACD, and Bollinger Bands to make smart trading decisions. Up next, a quick quiz to test what you've learned.
What is the main purpose of technical indicators? To replace trading strategies, to guarantee profits, to help traders make informed decisions, to remove all market risk. Amazing. What do leading indicators aim to do? Predict future price movement, highlight volume spikes, show real-time news, confirm past price movement. Two. What does RSI measure? Whether a market is overbought or oversold, price volatility, volume strength, trend reversals. Three. When does RSI typically suggest a buy signal? When RSI falls to or below 30, when RSI hits 50, when RSI equals 100, when RSI rises above 70. Amazing. 4. What does MACD help confirm? Volatility range, exact price levels, economic news impact, momentum and trend direction. 5. 5 in a row. What does the histogram in MACD represent? The distance between the MACD and the signal line, volume traded, current price, price range. What does a price moving along the upper Bollinger Band usually indicate? No clear trend, a false breakout, a strong uptrend, an oversold market. Which indicator is best for confirming an existing trend? Moving average, stochastic oscillator, Fibonacci retracement, RSI. 2. What kind of data do lagging indicators rely on? Economic forecasts, social sentiment, historical price data, news headlines. 3. What is the 61.8% Fibonacci level often seen as? A moving average, the start of a trend, a strong reversal zone, a guaranteed entry.